Welcome back. Breaking news, September full-time employment. We had 32,100 full-time jobs, and we actually see the unemployment rate at 5.4%. So there's obviously been a big change in the participation rate. Breaking news here on Sky News. Carson?
Yes. So net, if you bring together the full and part-time component, a build of just on 14,500, of that, enough to, as you say, bring the unemployment rate up. The estimate had been from a rise of the unemployment rate to 5.3%, but it goes higher than that. So, as you say, the participation rate sitting at 65.25%, which is slightly higher than the estimates of just bang on 65.
So that's the difference. More people out there looking for work, not able to find it, so you get quite a jump up in the unemployment rate to 5.4%. We'll look for any revisions, of course, on the previous numbers, so that's always important to just see what we can see. But at the moment, we do see an unemployment rate of 5.4% and 14,500 jobs added in total to the economy.
Simon Bolton is from Macleod and Cameron Judson from Chandler, Macleod. They are with us in studio, and we've got some guests remotely as well. But just to you both first, Simon, a decline of just on 17,700 part-time workers, a bigger push on though full-time employment from one set of numbers. Surprises at that?
Yeah, I think that the trend here was that it would go up. 5.4% is probably slightly higher than people anticipated. And no doubt that there are more people out there seeking employment. So that participation rate, again, not a great surprise, but an interesting trend developing, I think.
Cameron, hours worked as well. That's gone up to 7.6 million hours. And you've got a sense that this is a case of doing more with less yet again, or how does that sit alongside a bigger build in full-time?
I think the growth in hours is a positive for the economy. I think equally the comments before about the unemployment rate is probably in line with most expectations. But there is a structural shift underpinning those changes in terms of where are those jobs coming from across industry.
Well, just to understand that, or help us understand the hours worked though specifically, up by 7.6 million, I suppose the read is. So, yeah. If you're adding on full-time staff, but people are doing extra hours as well, what's going on that you're seeing?
More people in the workforce contributes to more hours. Set that against the greater participation rate in the economy for people looking for work, leads to the higher unemployment rate.
Okay, so that's
just
important.
More people in employment doing more hours worked.
Yeah.
Let's also bring in, on this one, Steve Shepherd from Randstad. He is in Melbourne. Steve, to you, we've seen money markets immediately sort of putting a bid into the Australian dollar, so less chance of a rate cut on this score. Are employers hanging out for that one at this point in the cycle? Is that going to change hiring intentions, or rate settings don't begin to touch their broader concerns?
I think it depends on what level you're talking at, Carson, but certainly there's a level of uncertainty in the market. Still an eye on what's happening in Europe. We've seen softening in growth predictions in China, and we've seen continued declines in the number of job ads. So
all right, I want to get as a domestic response to all those offshore conditions, my question to you is, do rate cuts hit home for your clients in the hiring intentions space?
Yeah, we're not seeing that the rate cuts are putting a great deal of emphasis in terms of the hiring intention, but we are seeing them adopt a wait-and-see approach to what's going on more broadly in the market.
Wait and see. Simon Bolton, is it wait and see? For how long do we wait and see? Because this has been a 3+ year long running sore festering in Europe. Wait and see for how long? For what?
I think it's a good question, Cameron. I don't think people know what for. I don't think there's going to be an event that will change behaviour. I think that this cautiousness is the new norm. People are whinging and saying, oh, it's so uncertain. As you say, it's been going on for years and years now, so it is how it is now.
Cameron, a response from employers, what are they doing?
I think employers, if they're skills short and the skills are essential to grow their business, they're hiring, and if they can defer the hiring decision, they're likely to be cautious and wait till post-Christmas.
I think another impact here is we're just finding offshoring. There are lots of jobs being put overseas. Why? It's cheaper. But also, I think in doing that, organisations are becoming more effective. They're finding better ways of doing things. They're making investments to do things better.
Is that something that's quite recent, or this been
No,
happening
again,
all year,
I think this is a trend that's been around for a while. I think that there is a time lag as well, as organisations say, right, let's look at offshoring. There's a whole series of work that needs to be done in the background to scope which jobs and scope which functions and where it goes. But there is a trend of employment being taken from the Australian market to offshore locations like in Manila or in India.
Steve Shepherd, to you, how are your candidates actually retooling to be competitive on that measure?
Well, I think we're still seeing, I think we still have to recognise in Australia we still have relatively low unemployment levels, even at 5.4%. So, in key areas there's still demand, and it's really a case of where we're seeing some of those bigger, I guess, job cuts in Queensland, etc., with some of the big changes that have happened to government there, where those candidates are really now starting to say, what are the skills that they've got there? How does that apply to the private sector, given that, a lot of those public sector jobs aren't going to exist in the future there. So there's definitely a focus on looking at what the core competency is and how can that be applied into perhaps broader areas and jobs that they perhaps hadn't considered in the past.
Cameron, what about, we're just talking states, what about in WA with the mining boom coming off the boil? Are you starting to see things soften there in particular, or...? We're
starting to see some softening in the existing operations where we're seeing the miners trying to be more productive and more efficient with the workforces they've got. But I wouldn't call it a downturn, it's just softening.
OK, so no major trend shift there, really?
Not as yet.
So what are you counting? I just think this is an interesting reaction to the jobs numbers, just to specifically go back to those, because it seems like the market's reacted to the headline read on the total number of jobs added, which is 14,500. The actual unemployment rate spiked up to 5.4% though, so that you've got actually quite a range of views out there on what it means for rates. Stephen Koukoulas, he's often on Twitter on these kinds of releases. He reckons if the CPI is okay and the monthly data just before the November meeting turned out to be quite soft, he reckons 50 basis point is possible from the Reserve Bank based on the back of how weak these numbers look. Then other people are jumping on this saying, great result, Australia defies expectations, we've added 14,500 jobs. So it'll be interesting to see how the Aussie dollar settles down. I think we'll have some currency guys coming up in the next short while.
Yeah, that's the point though, isn't it? Because Steve, Simon, the guest in Melbourne was as if rate cuts aren't actually what is motivating employers at this point in the cycle.
Look, I don't think rate cuts are necessarily going to be an indication of hiring trends. I think that it's going to be more costs and revenues. That's what's going to drive hiring decisions. Are we making enough money to pay our costs?
And are we making things that people want?
That's right, exactly. Demand and supply.
Yes. As a services story, and particularly in finance, which is kind of the bread and butter for you guys, what is the biggest game changer for this market likely to be in terms of making us an attractive destination? Increasingly, with Shanghai getting itself online, Hong Kong already, established, it goes without saying. Where do we sit in that whole tussle for deal flow?
It's a very good question, Carson. I think the challenge for the fin services market here is back to the point about being productive and efficient, but also having something that buyers want to buy from the Australian market, and so there's that increasing competition in terms of where will those deal flows go.
Because we don't have the consumer base, we don't have the volume as China does. It seems kind of an ever-decreasing slice of a pie that we're trying to lay claim to, with Asia the real growth region. Is that fair call?
Fair call when you're comparing China to Australia just in terms of demand. I think here it's a case of going back a few years, Australian talent was well viewed, it was relatively good value, we're well educated and mobile as well. So
no one speaks Mandarin here, so when you say well educated, based on what?
Well, based on numbers.
Everyone has an MBA, whether you're in any part of the world you can get an MBA. So what? It's about what are your language skills? We don't have any.
Well, we have very good English language skills.
Yeah, but that doesn't apply in China.
No, but nor do Chinese language skills here.
Don't you? You've got to be one of us.
And the language of international business will remain English, I think, for some time.
Well, that's fast becoming an open-ended question, right? The deals aren't being made in English. The skyscrapers in Shanghai aren't being done on English terms, are they?
Don't know. Haven't built one recently, Carson.
Right,
but most business deals, I'd say.
Yes. Okay.
Let's just show people some further detail on the ABS numbers and the state-by-state breakdown that we've actually just received.
It's a nice map, isn't it? Yes.
Good map. We do like that. 7.3% unemployment rate looks like the worst result, for Tasmania. 6.3%. We just had Steve Shepherd mention the Queensland kind of trends there. 6.3% for Queensland. Sydney looks like, or New South Wales, 3.8%. Is it? No, that's ACT, 3.8%. I'm struggling to read that. But 5.2% for New South Wales, 5.6% for South Australia, 4% for WA. Guys, any particular... Actually, we should go to Steve Shepherd, who's with us from Melbourne still, I believe. Steve, I don't know if you can see that or you just heard some of those reads, but any particular trends you're looking out for state by state?
I think the big change for us is what's been going on in Queensland for the last couple of years. Queensland's really been one of those driving states. So to now see those numbers really only sitting behind Tasmania is quite telling about what's going on in that part of the market. And I guess with some of the discussions that are now happening, or some of what we're seeing in the media about some softening, I think, as the guys there said, about Western Australia, that's creating the nervousness we're seeing in the market. These have been the states that have been, in the dual economy driving us forward, and as we're seeing those numbers softening there, I think that's what's putting this level of cautiousness in the market that we've talked about a bit this morning.
What about the whole policy setting environment right now? Are you sensing that firms believe that it's worth taking out, renewing leases on floor space because they will have a workforce to fill an entire floor? But I mean, what's been put out there from a public policy setting, even things like construction now? Are you seeing optimism, in the market from your clients, or are they pessimistic?
This word cautious just keeps coming up, Carsten. I think that people are not sure, and it's that uncertainty that means that, do people at the moment want to sign a 20-year lease on a full floor of a blue chip building? I think that might be difficult. But if you look across the skyline in Sydney, there's plenty of new blocks going up, and there must be the demand there, we'd hope. I mean, Barangaroo on itself is a huge number of office space that's going there.
Yeah.
So
banks and Google don't make Barangaroo, do they? I mean, you've got to go a little bit further down the line to sustain that with all the infrastructure that's leading into it. What about from your perspective? What's kind of the next big test on this market going to be?
I think we're all looking for what that circuit breaker is going to be. I think caution is the new norm. I don't think it's pessimism. I don't think it's optimism. But I think it's caution. And to concur with my colleague's point, I think going to the leasing example, it's a big commitment to make, and people are just being cautious.
Yeah.
And then they're consciously thinking about what are my hiring intentions in terms of, if I commit to that space, how many people do I need to have a productive workforce to deliver to my customers.
But you're saying cost is kind of up there on the list of reasons to be cautious, basically?
I think all employers are thinking, how do I get a more productive workforce, and how do I manage the cost of my workforce? And those two things intersect. So they're looking at their hiring intentions, and they're looking at their existing workforce and saying, how do I maximise the return from the talent?
This is ultimately a really good thing that we go through this period, though, isn't it?
It
that
is.
we actually finally look at how productive we are.
Correct. And we assess the talent we've got for both their competencies, and also I think the other emerging trend is, how do we train them and give them skills to be more productive and more competitive in the future?
And that's the thing. What are the hardest roles to fill because of that? Because the training just isn't in this market.
It's difficult to say there's one particular skill set, but I think that it's the specialisations. It's the specialist skills, the ones that are technically demanding, or the ones that are. You can talk about technical resources skills. Equally in the white collar sector, risk management's a big demand now. Compliance is another increasing commitment that organisations have. So where there's an increase in demand, that's where you're going to find the skill shortage. I think that's the. Yeah. That's going to be the key driver.
Steve Shepherd from Melbourne, from Randstad. You want to just throw in some comments?
Yeah, look, I concur with the comments of the guys in the studio there. I think the key is that people are looking for flexibility. So whether it's leasing or staffing now, they're taking, cost is key. Looking at how you get more out of that. That's why we're seeing greater growth in elements of the flexible workforce as well, as people are bringing in staff with specialist skills really to match the demand and be more competitive there.
Gentlemen, we're going to wrap it at this point. I want to thank you, specifically Steve, for joining us remotely from Melbourne, from Randstad. Steve Shepherd there in studio with us. Of course, we had Cameron Judson from Chandler, Macleod, and as well from Aqualis, Simon Bolton, regular guests on a very important issue of jobs. Thank you.
Thanks.